Hello, good morning, good day, good evening. Welcome to the live stream. I hope everybody can hear me. And the streaming is good quality. But I guess it looks good. Nobody's complaining. So I wait another 2 minutes to give people time to join. And then I will start. Okay, guys, I will start right away. We broke structure to the downside on many different coins by now. On ETH, on BTC, on majors, on USDT, for example, we broke it to the upside, and we are very close to the key level. So what should we do now? I mean, as always, we're just waiting for levels. My main idea that we're going higher from here was invalidated, and we broke, as mentioned, every structure to the downside. Plus, all the momentum seems to fade, seem to at least slow down. And the idea was that we are just pushing higher and higher and higher, and sometimes crypto does exactly that. But once we break the momentum, once we break structure to the downside, there's really no reason to be overly bullish anymore. Of course, there's always a case that we're just going higher. I mean, it's a market, everything is possible all the time. So we could definitely just reverse from here. We're still in the 4-week level. We're just going higher. This was just a fake out. I was tricked into selling more or less early, would some people say. But in the end, I mean, I did a 100% gain on my spot bag yesterday. And so I'm quite happy with this trade. And my main plan was anyway that I'm going to TP into the supply, and I was able to push price. I mean, I sold yesterday for something like that, 7% higher than selling first into the level. And I mean, I could have sold for another 7% higher, but this was the risk to reward I was willing to pay to to push this trade as far as I can. But right now the tide seems to turn against my idea, so I see no reason to hold on to this idea any longer. And I'm just very fluid in my approach. So I try to push those trades, but I'm never like get left back holding. At least not paying like a full stop after such a move. And so overall, I'm pretty happy with this whole swing. And this brings me to a point because it never feels perfect. So this is something I really want to address today, because even though I made 100% gain on this bag, and it even went a little higher than I first anticipated, and I was able to extract a big profit, but I had this idea that it's going higher, and it just didn't play. And the feeling that which this is leaving in me is always a feeling of, oh damn, I was not right, and oh, the idea was wrong, and it just doesn't feel perfect. And this is so interesting because in the end the trade played perfectly. I made a lot of money, and I'm still feeling like could have been better. And this is something in trading, I don't know if it's just me, but for what I've heard from other people, many people face the same situation. And the thing is, you need to be so fluid in your thinking, because even though this was my idea, once this breaks down, we get a lot of sell pressure here, I'm just selling. And I did exactly what I've planned. But it doesn't feel perfect because I didn't sell the Pico top. And yeah, of course, I could sold for 7% higher. But in the end, it's not about these last few percent. The idea was, if you're going higher, I want to keep this trade as long as I can. And if you break down, I cut it. So I followed my plan, but I'm still feeling like it was a little wrong, or I did a mistake, or it could have been better, and all that. And this is this satisfying feeling that trading oftentimes leaves in one. You really need to overcome this, because so many people are probably trying to push those trades higher and plan to sell at some point, and then the tide turns against them, and then they just don't sell at all. Why? Because they feel like, oh no, hopefully it goes back to all-time high. Hopefully I can sell on the rebounds. Oh no, it's going higher. Or they hold on to this one idea of it needs to go to some certain number. It doesn't need to go somewhere. It's a market. Everything is possible. My idea was that we sweep those highs because it makes sense from a liquidity perspective to sweep above it, attract a lot of new buyers, and then we go down to these key levels. But it didn't happen. In the end, we broke down now. We might reverse from here, but I don't see like a real reason or big confluence for this happening. And so I think we're going to at least this key level first, which would also align with the Terra Dominance level, probably with ESBTC. I will show it in a second, what my whole thought process. But back to this idea of sweeping those highs, this could still be in play, like sweeping those highs just still makes sense to me. But yeah, it's a market, it's probabilities, and I was assessing the probability wrong and still was able to make money in the end. And this is the key. I was more or less I was wrong on this part of the idea, but I'm still making money and locking in gains. And what I feel and what my performance is oftentimes not the same. And this is very important. And this is also that's why it's also very important that you're tracking your performance properly. Like really track your performance every month, set a certain percentage, a realistic one, which you want to achieve every month consistently. And for example, I aim for 10%. And this month, combining all of my accounts, I exceeded it by far. But from my trading count alone, I reached 10% this month. And I don't achieve this always, but I like to aim for the stars to reach the moon. And for me, this little pressure or this little pushing myself a little further is what makes me performing better. If this is like stressing you out, like not achieving your goal every month, you should pick a target which is achievable, like 3%, 5%, 8%, whatever it is, but set a certain goal and be realistic with that. I mean, 10% is like really elite level. There are not many traders performing above 100% a year, and I'm aiming for that. But I'm still totally fine if I don't achieve it. I mean, if it's a profit a month, if I achieve 5% or something, I'm still very happy, because it's still a good performance, especially considering how many people are not profitable in this market at all. And if you're still starting and you just achieve 1%, it's still good. So don't stress yourself out. If you're profitable, you're profitable. If your idea was wrong, or if it's not perfect or whatever, all of that is not important. We're here to make money. We are not here to be right all the time. Of course, it's nice to be right, but this is in the end, this is not the goal. So back to ETH. As said, we're breaking structure here to the downside. The momentum seems fading. So I'm really happy that I sold my spot back yesterday. Once you sell it, it's always like, oh damn, did I do the wrong thing? Is it going to reverse from here? Did I sell too early and all that? So it's just, as mentioned, it will never be easy. It's the same as it's hard to press the buy button down here, it's hard to press the sell button up here. But if it's like that, you usually know it's the right time, or around the right time. As said, we are not here to be perfect. But in the end, I made a good gain. The whole month, the whole July was pretty amazing for me. Lately, I paid a little bit back because I was trying to long all those key levels. Doge retraced a lot more than I expected in the beginning. I missed to cut some of my spot back here, or I tried to add some spot here, and I cut it immediately. So in the end, there was no strength. I didn't even update this one because I was selling it immediately again. And also I got stopped here on the 3-day level. which made me pay some gains back. Was it a 3-day? Yeah, you know what I mean. This little block here was not the best one anyway, but I expected to reverse from here, to be honest. And now we're in this demand. We have this partial block below. We have another demand here. So I'm willing to add some spot and build some longs down here. And this could also totally align with tether dominance here, which also reacted more than I expected here. Because my main idea was, as mentioned, that we are going to sweep those highs on ETH, and this would have meant that we are like smashing this level, or at least wicking through it, and then something like that. And it didn't play, but in the end I was still able to make money. We also weren't being able to close a full day, or not even a partial day, above the swing high here. And so this also seems a little toppy to me. Also this big sell-off candle here, those big red candles are not looking too promising for instant reversal from here. But we're still in a level, so the probability is still given. Plus we have this level below, which would align with this level, depending on what Bitcoin does. It's probably plus minus a little bit. So I'm definitely willing to long this here. In a perfect world, I get my short before. In a non-perfect world, this comes. And in an even less perfect world, this gets just smashed. And we go all the way back down here, which would be max pain probably. And it aligns with the psychological level of 3K. Probably bounce here a little bit. And then we nuke through. And then ETH lost 3K and all that. Yada, yada. So would also make sense. But we have some demand here to overcome first. And also tether dominance is very close, so it makes sense to expect a reversal from here. So I definitely try to long this. Could also align with Doge here, and all those other coins. I mean, X is looking not so weak in this level. I added a little bit of spot here because I had some gains on Maxi left, and I thought if I'm going to withdraw it, I can withdraw it in crypto anyway, because I don't want to have funds on Maxi anymore. So yeah, I added a little bit spot, which is from a risk to reward perspective still fine here in my opinion, but it's a very small position anyway for me. And so yeah, we have, as mentioned, a lot of demand below. Makes sense to long this. It's probably as another level somewhere here. I don't know what's going on with the stable dominance chart, but we have another level here. It's still not, there's still no history. It's either a bug since almost a week, or it's like on purpose, because maybe this level will react and this would just be the range low here. Something like that. Who knows? But this is definitely weird. Yeah, the SPX for us crypto traders also important, because it just drags everything with it up and down. And this is definitely a big sell-off, no doubt about it. It's on high volume. This could be the beginning of a bigger sell-off. This could be something like my arrow suggests. This was my idea back here in May. It played out quite good until here. We have not seen any retracements here. It was more or less just up only. We hit the minus 618. And from a timing perspective, the arrow seems to be on a little bit on point. I hope that this idea is just following, or the plan is just following my idea, or I mean the price. Because this would be very interesting, because if this plays, this gives me my plan for the next like few years. And the more it validates itself, as said, this is more about the timing perspective, this whole arrow here. It's not about the perfect prices. It went a little higher than I expected, but I'm not trading the SPX actively anyway. But for me, it's very interesting when this is probably entering a bear market or a bigger sell-off, or something like that. We have also some monthly stuff down here. Also on here, it's only a partial on the SPX, but we have it on the Nasdaq as well. So this could be very interesting for a not so aggressive bear market like most will probably think if something like this happens. Time will tell. But this is the idea for the SPX, and I hope this continues to play a little bit more ranging and a little more upside for our beloved cryptos as well. Especially Doge is like a real pain in the ass for me by now, because I thought we're going to at least to the 30 cents level. I mean, I profited big from Doge already over the year, and I profited again. So I cannot lose with this position anymore because it's just gains more or less. But yeah, it would be nice to do what I want. But yeah, Doge is just like it's. I mean, in the end, it's a meme coin, and so it's yeah, aggressive in its movements. But the amount of volume here is, in my opinion, pretty promising. That this is continue to go higher, and we are forming these waves, which start in the beginning of this vertical move as well. And these waves are definitely bigger this time, and we have a clear invalidation if these levels don't hold and there's no reaction at all, and all key levels get just smashed. I'm cutting here everything around break even again. I probably will try to long this here. Yeah, but I mean, this is still, if those key levels don't hold and signs of weakness, it's still minus 30%. So don't forget it's a meme coin. But as said, I think these waves and on this high volume seems to be promising for the bigger idea. But we will see level by level. So I will try to add here, build a long, and then we will see. Yeah, so I think this weekend is going to be more interesting than the last one. I mean, the markets in general closed like red, like really red, which probably left a lot of investors and not so experienced traders with big fear. I mean, the amount of red is just insane. And crypto's open over the weekend. Some fuckery here on low volume makes sense. And hopefully we get those key levels soon, so we can do something on higher time frame, because everything in between right now is more or less just noise or lower time frame stuff on low risk. And so for me, it's a game of patience right now. I have mapped out my plan. The one plan was invalidated yesterday, and now I have a new one, not holding on to my bias. I don't know how to treat Bitcoin dominance, to be honest, because I was never looking at it until this upper area here. And there is this level which might act as confluence, but I think Bitcoin dominance was never as important as right now, because ETH is exceeding Bitcoin in volume like every single day by now. So if we have more upside left, this could act as nice confluence for altcoins. ETH dominance is still hammering this supply here, this higher time frame supply, and it's not able to really break above it. But it's also not creating lower lows here. VWAL is just going lower. We have seen this before. Sometimes it's just nuking right down. Not like here. We will see what this is going to do. It's definitely in an area where I say something is going to change significantly in the market. VWAL might be not so important right now, but it reacted again, of course. And what's very interesting is EVOL 7-day is coming back to this green box, and every time we hit this green box, I made a post about this. Every time we hit this green box, it was a major inflection point for ETH. It was not like always down or always up. It was just telling you that when it hits, the next few days or the next week is going to be very volatile, sometimes to the upside, sometimes to the downside. Time will tell, but it's definitely something happening here. Yeah, total is, in my opinion, right now not so important. We have closed on total 2, we have closed below this low and below the level, which makes this year a little more likely, in my opinion. Time will tell as well. We are still in the level on total, so this is worth noting. We haven't left it yet. And so, as said, there's always the potential, the possibility that we're going to reverse from here. But I think overall probabilities are not in this favor right now. And either way, I'm prepared. I have still my spot longs. I'm trying to catch some shorts, and I TP'd on the way up on my longs, and I TP'd on my spot. So it doesn't really matter what happens from here. I'm just making money, or paying a little bit back in order to make even more money. And once you really understand this, you really cannot lose anymore. The only thing that can lose is your feeling, because as mentioned, even though I made a lot of money this month, it could have been more perfect. I could have been more profitable. I could have managed this better. I could have had the right idea from the beginning. So it doesn't really feel like this big win, but in the end, looking at the numbers, it really was. And either way, I'm prepared for higher or I'm prepared for lower. I locked in gains. I'm trailing my positions. So the game gets really a lot more fun if you do that, and stick to your plans and all that, because at some point you just cannot lose anymore. We're also losing the low here. I mean, usually I don't want to interpret too much here. It's definitely losing the low. We have a level below, so could act as confluence as well. So there's really a lot of confluence right below us, and yeah, it just makes sense to definitely go long there with the profits. Definitely. Yeah, so that's it from my side for today. As said, don't be sad about not selling at the peak or top or being perfect and all those things. It really doesn't matter. If you made money, you made money. Sometimes you're right, sometimes you're wrong. But if you make money on a monthly basis, you are a good trader. But for that, you really need to track your performance, because as said, even though the numbers tell me I'm very profitable this month, my feeling doesn't really support this, to be honest. Okay, guys, you can ask your questions now if you like, because I've said what I had to say, and now you can bring your questions. Do you see further sustained downside or downside and then bounce? Um, yeah, as mentioned, I'm seeing those key levels here, and I'm thinking that those key levels will definitely react. And so it's more likely that they react than they're not. So this means I can try to long here, and if I get a bounce, I've always the opportunity to make money and to remove my risk. And this is why I like trading higher time frame key levels. And I even trade like lower time frame ideas. Most of the time, my lower time frame ideas are also based around higher time frame ideas, because if I get the reaction, I can always remove the risk and can even take out some profits if I want to. And this is just the perfect place to be in, because if the trade continues rallying, that's good. And if not, I'm already profitable and risk-free. So if I see further sustained downside, I mean, the question is, what is further sustained for you? Because I mean, yeah, as mentioned, from my perspective, it makes total sense that we're going to those levels. And I mean, it's minus 8% on ETH. This could mean minus 20% on certain alts. And it could happen in the next week. It could happen in the next 2 weeks. As said, I think my main plan was that the first week of August is going to be bearish, and I thought we are going to go higher first and then bearish, but I mean, next week are so many crypto-related real-world events. I would be surprised if there is like not extended volatility. And the question is, are they using those narratives, those events for more sustained downside, attracting buyers and nuking on them, or is it like creating the full-blown euphoria with all those events now? In the end, it's probabilities, and I cannot know either. I just see the key levels, and I'm planning around them. If it hits, I'm long. If it doesn't hit, I'm not long, and not long from this level, but long exposed anyway. So I try to prepare for every outcome. And the probability of seeing more downside from here is definitely higher now after those last two candles and the close below the swing low. I would consider more sustained downside and overall market shift into bearish. Yeah, as said, locally, and I mean, we're talking about daily here already, it's definitely turning more bearish. But you need to take it level by level. This level is good. These levels are great. You have confluence. You can try to long here. If you missed to TP on the way up, so if you're like on full size on all of your positions, because your question sounds like you're asking if you should sell here or not. But overall, I would definitely be TPing in this area if I had some ETH, and I did that, like publicly, because if we see more downside, I have more money to re-expose. And if we have more upside, I have still 50% of the bag left, so I'm more prepared for the outcome. And as I said, it seems like the tide is turning here. I actually have no spot exposure at all for the first time in a long time. Yeah, that's good or not, depending on what the market is going to do. But overall, take it level by level. It's like I can explain 30 minutes why I think the market will go up. I can explain 30 minutes why I think the market will go down, and either way, it makes sense. And either way, I'm trying to prepare for both. Right now, with the close below, with the big sell-off here, and the August week, which I thought it's going to be more bearish anyway, around the corner, I expect, so I shifted my probabilities to more downside from here, but I will be long at the kilos. So I'm just curious on your overall view in case you missed the beginning of the stream and I'm considering when to deploy how. Yeah, as said, key levels are clear. They have the confluence on almost all charts here. And it's already very close, especially here. What Tether Dominance likes to do is to overshoot into demand here. There's usually some level here, and then reacts first in the first move here, and then people think that's it, and then there's another spike, oftentimes overshoots a little bit. This is like very common, and it's oftentimes just simple supply and demand, so don't forget that. And so I'm looking at this. Once we hit the red area, I'm definitely very interested in longs, but I will not buy until ETH, for example, hits this, and ETH PTC is very close to this. So I want to have, for big exposure, I want to have perfect confluence and everything in between, also the 12-hour level on Doge here. I tried it, but I'm not on the same size. I'm going to try once all the confluence hits together. And I also try in those levels, I try to build a big, like high time frame swing position, and I usually try to build a smaller one as well with local invalidation to increase my overall size and to have a small position on high R, which I can TP early on the first bounce. And I can either use this money to cover the stop loss or to add exposure to the bigger position, or I moved the stop loss to break even on the higher time frame position as well, and then made some profit on the reaction. Because as mentioned, those higher time frame levels, especially if they have all the confluence, they usually react. Yeah, you're welcome. That's what the stream is for. So you can ask all your questions. No wrong questions here. if I'm not mistaken, you tend to trade a smaller number of crypto assets. Yeah, that's exactly right. I mean, I'm trading like in the TradFi market and all different kinds of markets. And to be honest, the crypto market is just almost 100% correlated. And if it's not, it's usually a trap. So like Doge yesterday, Doge seemed to be so strong from the level while ETH was just grinding lower. So you could have thought, oh, I need to long Doge, Doge is breaking out or whatever, but usually it's just a trap. If one coin is like rallying more than the others, it's usually just a trap. And so crypto is correlated almost 100%. And I don't see a reason to trade 10 different coins if they're all doing the same thing, reacting to more or less the same levels. I like to look at a like decent number of more or less 10 coins. Most of them I don't trade daily, but for example, I like Axis because the potential upside is like huge from here. I bought some spot on Pixel in this area because the potential upside is very huge, but I don't look at this chart every day because I'm really not interested in trading this coin. And usually those smaller coins, they're like so highly manipulated and the structure is like sometimes just so misleading that you're better off trading those higher volume ones. And I have some spot left from certain coins, which I, on very small size, look at, let's say once a week or something. I like to trade already, to be honest, even though the last level, I mean, this level gave a nice reaction and I traded this and it made me a nice gain. Got stopped in profit after 80% TP and already seems to trade very clean on the hidden levels. And so I closed my swing today, but we're going to hit another level soon. So I really like Ordi for some reason. Looking at it at lower time frame, once those levels are hit, is like really a pain in the ass because it moves so strange and violently and so misleading oftentimes. But overall, I really like it. And more or less, I still just trade ETH. I still just trade Bitcoin with this. This is just beta. So it just follows mommy and daddy. And the majors. And so if I trade such a level, I trade it on those charts, dominance charts, totals, ETH, and I take it with confluence on those. So tracking ETH and Bitcoin very closely plus the majors is all you need. And if you find some coin with a nice level, which makes more sense at the time for a higher R, for example, for a cleaner level, it makes sense to take those levels sometimes, but overall, I'm still trading, the alpha coins, the majors, ETH and BTC. And I really like Doge because I think the narrative for Doge, like Elon probably being the Doge father and all that, and the violent moves, I really like to have a violent coin and like this potential RR monster in my portfolio, but that's it. And everything else I'm trading, it's like on very, very low size. And I rather expose myself to like really regulated companies with like good narratives, good looking charts, sometimes paying even dividends. And so I don't see a reason to expose myself to 30 different shitcoins, which are all unregulated. The lower the volume, the higher your likelihood that this coin is even rugging. So sometimes on those lower ones, you can't even expect like a normal stop loss because if the coin is rugging, and this is definitely given at some coins, you're paying the full size. And so, oftentimes to me, it doesn't make sense. I'm trading majors and I'm adding to good looking, better R levels on major beta, more or less. I'm just get very frustrated with crypto and making sure that I look at totals, USDT, etc. And it's one thing I feel suffer a lot for in crypto. So I want to master that and narrow down my coin list further. It's hard coming from being a crypto insider and knowing a lot of founders and teams etc, removing any bias about news or upgrades or chain releases. So I had to remove a lot of the info I was given, and I was wondering if you have a short list of coins. Yes, I also think Ordi is very active in respects to levels. Yeah, that's true. So I said I really like Ordi. And for real trading purposes, I track BTC, which I'm not trading too much at the moment, or I didn't because the range was just doing nothing, and I don't like those choppy unvolatile ranges. I trade ETH. I have a bad relationship to XRP because somehow I just never get it right with XRP. So I'm not trading it too much, to be honest, but I have it on my list because high volume, or more or less a major. I really like trading Doge. And these are all like, Ori is probably the only one which I really trade on perps. And these are all spot buys, spot holdings from lower, from way earlier, or recent buys. I'm looking at them maybe once a week to just like being exposed to different narratives. And let's imagine one of those is running like really hard, going to a best case target. It would even pay for most of the other stops. And because we're in crypto, if one of those is doing that, all of the others are probably doing good as well. So yeah, this makes sense, being exposed to different narratives, but this is like maybe like 10 to 50% of my whole portfolio, and the rest is spread it on per plays and spot plays on those. Not the XRP, unfortunately. And XRP seems to react on normal demand a little better sometimes. I'm not quite sure about XRP. It just annoys me. But I have it here. And to be honest, this is my list, and I'm trying to implement different strategies to different coins, and I have all those crap coins here from collected over the years, but I've never looked at them, nor do I trade them. It just doesn't make sense to me in a correlated market. And I use my attention and my focus rather for TradFi plays, because as said, there are thousands of tickers. Those are regulated. They usually have way higher volume, and there are great narratives as well. Sometimes most of my spot buys on stocks outperform my crypto buys. Anyway, so people are in crypto for the volatility, but in the end, we're more or less doing most of the time nothing but ranging. So yeah, I rather put on my focus on such plays. And also, they're, as mentioned, they're regulated. So if my broker goes bust or something, I'm going to be repaid to almost like 100K, on some even more. And on crypto, if your exchange goes bust or if your coin rocks, yeah, bad luck or bad risk management. Depends on how much you lost. I remember waking up to Lunar collapse and being 50% poorer. I didn't even have exposure to Lunar. Yeah, I remember this time as well. I was not really into crypto back then, but I was tracking all those real world stuff. And yeah, because you said about upgrades and chain release and all that, I mean, I cannot tell you how to program your mind, but for example, if you know that most of this is just crap, because it is, usually it's just for creating a narrative and all that, you can use this knowledge to understand what is meant to make people think. So, for example, I was into this like real world fundamental stuff as well, and now I use this knowledge to understand what people who trade this stuff and look at this stuff and do not look at charts are thinking because of those news. And you need to be careful, because a lot of people think once they figure this, they think, oh, good news is bad news for the price. But to be honest, it's not that easy. It's not black and white, but you can use this knowledge. Let me check. We have somewhere. Oh my God. Probably not gonna find it. Maybe I find it on BTC. Because, for example, the ETH upgrade was expected from many to be bearish, because the last upgrade or the last update was very bearish. But here it was. Look at this. It was on 7th of May. Let's look at ETH. 7th of May. Yeah, it was not too bad to be long, to be honest. And how many people expected this update to be bearish? And yeah, so it's not always bearish, it's not always bullish. We had this update in like the bear market, and then it was very bearish. We had a pump into it. Chapella, it was on the 12th of April. And this, if I remember correctly, was not so bullish for price. I was in 22, right? Must be. No, it was in 23, actually. Yeah, it was. I mean, we pumped. We pumped, but only for a few days, only to go way lower afterwards. I mean, if you bought this pump, you were down another 25% or something. So it's not always bearish, it's not always bullish, but you need to figure out, you need to like connect the dots. You have those bullish narratives being used to attract buyers, and you have these bearish narratives like to explain sell-offs and to attract sellers or to force sellers. And you need to know when it's right to expect what. But you said, or you're saying you're in crypto since 2011. 11, I mean, it's so you have a lot of knowledge of this fundamental stuff, more than most probably. Now the thing is, you just need to forget some things, and I know that, for example, I think that in the first cycles, bullish news were just bullish, and this changed so much because the market became a bigger trap and a bigger trap and a bigger trap, and now everything is just to mislead and to manipulate and all that. But you need to collect the data like I do here, because then you can compare when everybody's selling, everybody's saying, oh, the ETH update is going to be bearish. You have the data to maybe say, it's not always bearish. Because, for example, in here, 2021, there was the ETH London update, and it was also not the worst time to be long. I mean, it was the 4th of August. And on ETH, this was 21, 4th of August. It was also not so bad, probably it was rather bad to expect a retracement from here. And it did another 50%. So it's not black and white. And use your fundamental knowledge, make it your strength, because you know more than most people about these things. And so make it a strength. Don't let it like bring you down, manipulate you and all that. Gain self-awareness, gain self-control, and use those things for your advantage, because you know more than the others. It's not a bad thing. You're welcome. Confluence, yeah. You can call it confluence. You just need to work on confluence. You said you can call it confluence, but you can also call it like liquidity. And I mean, as said, crypto is 100% correlated. It's a market that is just correlated, and it's all based on liquidity flow. And we have all those different charts to make this liquidity flow visible. And the same way the Dixie, like the dollar or the euro, is affecting the global markets. And if people sell their dollars into assets, those assets rise. And if billionaires do that, or everyone does that, the valuation of the dollar is going down. So everybody holding the dollar is losing, and you're losing, and you're missing out on not buying those assets. So there's always this like liquidity rotation all the time. But it's not just dollar and assets or USDT and crypto. It's a lot more nuanced, and it's a lot more complicated. The same way liquidity flows from Tether dominance, it flows from ETH into BTC. It flows from BTC into the whole other market or altcoin market. It flows from USDC. It flows from other stablecoins. It flows from the dollar. It flows from the euro. So crypto is really complicated in that sense, because there's so many layers of confusion and so many layers of garbage, more or less. Or no, let's don't call it garbage. Let's call it ways to deploy your money. And so you have to track a lot of things, but in the end, it's about liquidity flow. It's about rotating from one asset, from a currency into the next, and the liquidity flows from A to B, to C to D, to back to A, and you need to track this flow. So your job is not to wait for the green box to be hit, but to understand what this really means. Right now, Tether dominance is on the rise because people selling their assets, and you can see this on the crypto charts and the tickers, that this sell-off is partially being rotated into Tether dominance. Those levels, those gaps, they contain liquidity, and more or less whales have agreed on selling or buying into them in sync. And so we want to do the same thing. We want to follow the liquidity flow. We sell into such things and we buy into such things. So we rotate our like Tether in this case into an asset back with the whales. And you want to understand the liquidity flow behind it. It's not just a red box. It's not just an FEG. This is your map. This is showing you what is going on inside the candles, behind the curtain. This is what is important. You don't say, oh, I need such and so many boxes. So no, you want to understand what whales are doing, how they attract liquidity, how they attract buyers, how they create sellers, all those things. And you can spot their footsteps on those charts. This is what you do. You don't like only trade red boxes or green boxes. You track whales' footprints and you try to trade alongside them. So I don't take a trade when the wind direction is wrong. Yes, sometimes you just do that because there is a level. You manage your risk. That's why we manage our risk. We trade probabilities. You cannot know before. So you manage your risk. You go long or you go short. You try to align as much things as you can. So you trade higher time frame levels. You want to see this level on several charts. You trade with trend. And if you do all that and the level still fails, that's the reason why you manage risk. Because if you could know before, you can't just go all in on every level because then you trade certainties. But that's not the case. That's not the case for the biggest and the most profitable traders in the world. So the wind direction is based on trend like / momentum, higher time frame key levels, and majors. BTC, dominance, totals, ETH, all that. And if you find yourself trading levels that are not aligning with those majors and you expect a single altcoin doing something else, or you're always trying to trade against trend, and the trend was up until we closed below this low. I mean, it's not the strongest close by now, but it's still a close below, and the momentum is also fading. The trend is changing. So right now, for me, being long only makes sense from the most optimal key levels. This means the most amount of confluence, best case order flow confluence, and all that, and then some execution tactics on top, because usually I don't pay a full stop if I don't want to. I usually know when the tide is turning within the level, but this is a skill in itself. Other than that, try to trade major higher time frame key levels, and overall trend is still up. We created a higher high here, we created a higher high here, so it makes sense to go long here and here, and you might pay a stop for that. That's why you manage risk. That's why you trade a risk to reward of at least 3, 4, 5, and you manage risk, because this makes sure you can be wrong more often than not and still make money. Because as said, we're trading probabilities, you cannot know before. Yeah, you're welcome. And there will never be something perfect. And I can tell you that because I'm tracking Tether dominance since a long time, since Monitor brought my attention to it. And I mean, look at this wick. It wicks so crazy above this demand, and then even the third drive and all that. It's never perfect. It's always messy. It's never like you expect it to be. Sometimes it's the demand, sometimes it's a hidden level, sometimes it's this and that. And the sooner you accept that it's just messy and it's never going to be perfect, the better. You at some point you just know to read the signs correctly at the right time. And as said, even though there is this red area here, I think it's also likely that we're going to wick into this demand here, which is like 4 there as well, because this is what Tether dominance just does a lot of times. So yeah, it's going to be messy anyway. And when we reach the good levels, it usually feels like it's the worst time to go long. And that's the time when you want to go long, and the other way around for selling. You cannot ask all your questions, guys. Because other than that, if you don't have any more questions, I will wrap up the stream. I'm going to wait another 10 minutes. Maybe you come up with some questions. And that I think we have covered a lot of things today. Do you have a strict TP strategy? I'm running an account with stop loss or nothing. Yeah, I mean, a strict TP strategy, usually I like to TP on the first area of resistance. This can be an FVG fill, an opposite pole, cement, demand, supply, whatever. And as long as you don't feel like you can predict or like read the momentum and all that correctly, I would recommend to rather TP very early on. So you just lock in some gains, you get a reaction, you lock in some gains, you move your stop loss to break even, and then you're safe. So with this strategy, if you just trade higher time from optimal levels, you will usually get this reaction. And then you can TP, and then you made some money, and then you are risk-free. And if the trade continues running, that's great. And if not, you have nothing lost. Best case, you gained already something. And with this, you can acquire a lot of experience and like take out consistently small chunks of money, like 1%, 0.5%, whatever. All of that matters, because let's imagine you target this 10% monthly goal, which you talked about in the beginning, which is almost elite level. A percent gain is a lot, to be honest. And if you have this consistently, this will make you so much money if you're not greedy, because usually people are not satisfied with 1% because it's a small account and it doesn't feel like you made some money and you put in all the work, so it should pay off and all that. But overall, a percent per trade, if you can do that consistently, or 10% a month or 5% a month, this is a good performance. And you need to think in these percentages. So rather lock in some gains early until you really understand the momentum and all that. And account with stop loss or nothing makes total sense, because if you're new to trading, you should just trade those levels, figure out where they react, where you should place your stop loss, everything on low size to really gain this knowledge. It's not about making money, it's about building the skill, building the foundation of your skill. And I, for example, have a lot of execution tactics. Usually I try to not pay the full stop. Usually I play my levels very wide. I go in with big size, and then I tighten my stop loss and add, or I just tighten it, and it's then on lower risk, of course, but it's riskier because it's tighter. Then I have lower time from execution tactics, stuff I'm looking for, cutting early, or TPing way earlier than expected, and all that. So my approach is very, very fluid, but it took a lot of time to get to this level, and also I fumbled a lot of good trades. With that, I mean, now I have the skills, so I'm pretty happy, but I wouldn't recommend doing this in the beginning. So just learn to read the levels, trade the levels, getting to know your mental game and all that, and then you can improve over time with position management. There's so many things possible, you wouldn't believe, if you know what you're doing. And as said, the way there is rocky, but it's definitely possible. And for the beginning, I would still recommend to just, okay, it should be fine. Yeah, I think so. So I have to add it to the other clip. But yeah, to answer your question again, stop loss or nothing makes total sense until you gain more experience. Then you can play around with execution tactics. And it all depends on what kind of trader you are and what kind of person you are, because I'm very fluid in my thinking and in my approach and everything. So I'm more the intuitive trader, like Mark Douglas says. And if you're more the mechanical thinker, for you, stop loss or nothing might be the better option, because you just trade the level, you get to your TP or you don't. And everything in between is like intuitive and fluid. And if this is not your way of thinking, it's probably not serving you very well. And so you need to figure out what's best for you. But for a beginning, this is definitely a good approach. But on the other account, I wanted to try and work on when to move stop loss to break even. I usually move my stop loss to break even once it hit my first TP. And as said, this is usually my the first area of resistance, supply, demand, opposite pole, whatever. And then I want to have my stop loss at break even. Or sometimes if I see liquidity left within the level, when it reacted, we have some liquidity left, and I expect price to come back, and it's a higher time frame trade, and I really want to be in this trade, I take a TP, and this TP maybe covers a part of my stop. If we come back there, usually because I'm doing this full time, I have time to cut this trade early. Maybe it's not perfectly break even then, but with the TP, or it's just a partial stop, or whatever. So this is, as said, there is so many things to do. This is also way too much for this live stream. But a good approach for you is stop loss or nothing. And once you reach your first TP, which should be at the first area of resistance, and I'm talking about the same time frame resistance, not like you take a 3-day trade and then you look at the first 1 hour resistance. No, I'm talking about like a daily level or something, something that makes sense. And to be honest, it's anyway better to stick to higher time frame for the beginning. And typically when I hit the first TP, I move my stop loss break even. Yeah, that's the perfect approach. Now you just need to figure out when to do your first TP. And as said, if you, for example, take a 3-day level, I usually don't drop lower than 12 hour to figure out targets for those higher time frame trades. And you need to consider that those higher time frame levels usually take more than one touch. So it's not one touch go. Usually it's one touch, another touch, a slight touch, and then it goes, something like that. And you might want to be more aggressive with like leaving your stop where it is. But you just need to learn to read the signs properly, like with order flow or with execution tactics, as said. But this all comes with experience and time. So you don't need to force it in the beginning. Just collect experience, journal your trades, stick to higher time frame, set realistic goals, TP for those goals, and the rest will come with time. You're welcome. You get the prize for the most questions and for the best questions today, and for the only questions. To get an insight on the kind of problems more advanced traders are encountering, do you mind me asking what kind of self-development you're focused on at the moment, whether it be mental, execution, etc., to help you level up? Yeah, it's a combination of everything. My mental game was always my biggest strength, though I had never problems to just stick to my plan or manage my risk properly. Of course, I had my issues, don't get me wrong, and I still have sometimes. For example, yesterday when I TP'd my ETH spot play, I was feeling like, oh damn, no, no, and this was wrong and blah blah. But this was my plan, and I just stick to my plan. And all this is possible through discipline. And I said this was always my strength because I was working on that before trading already. But it's still an issue sometimes, and I just need to control myself. So I like to say, if you have a thought, it's not you. It's a thought. It's like a tool. So you don't need to believe your thought necessarily. And there is this quote of trained mind can play with the thought, but don't necessarily needs to believe it. And I think this makes perfect sense also in trading, because I have a lot of different thoughts and emotions sometimes, but it's in the end, it's about what I'm doing that counts. And of course, I'm still focused on being as disciplined and being as good as I can, but it's a performance game, and sometimes I have better days, sometimes I have worse days. This is just the reality of the mental game. Execution is my biggest focus right now, to be honest, because I figured with execution there is so many things possible. So I can, like, if there's a higher time frame level and I trade it, for example, let's take the Doge example here, and this is to this level. I mean, it's a 3.5 hour, which is not bad, and I mean the stop loss is 25%, which is looking very nuts. But I know that if this level hits, I'm able to scale it down to something like this, and then it's already a 5 hour, and a 5 hour trade if it plays, it's like really good. And once we are here, I drop down to lower time frames usually, and I'm trying to figure out when to deploy the most, because if it's just going down into the level and there is no real break of structure, there is no reason to oversize already. And if it's going way lower and I see the break of structure or the shift and trend here, I can always add, and sometimes I'm able to add on very low time frames to trades like this, like a 10 hour or whatever. And then I can TP this on the way up of the local range, and I have the higher time frame idea for way higher targets. So this is what I really like, because this makes sure I'm profitable and I increase my gains, best case. And this makes sure I'm exposed either way, because if this gets stopped and I don't get any more signals, I have this white one, even if it wicks down here and it goes higher, I'm still exposed. So I like to keep it fluid, and with the position management, this is like, for me, it's like one of the biggest game changers. And so I'm very focused on this, and yeah, there's just so many things to it. It's like position management is like, if you play any sport, tennis, golf, whatever, it's like the refinement of your swing. So if you play forehand and tennis and you train it 100,000 times, at some point you can do trick shots, you can curve the ball and all that stuff. And I'm not a big tennis player, by the way. Probably I'm using the wrong words here, but it's just for for showcasing what I mean. This position management can be exactly this if you know what you're doing. And for example, also if I enter here and price is not breaking structure, it's just grinding lower into this level, I might as well cut the upper one here, and I'm adding back lower, because why would I want to be exposed here if I see prices just going lower and lower and lower? I want to be exposed in this demand here. So if there is no momentum or no change in structure or no nothing, I probably cut this trade early. And for example, I leave this limit order here, or I have put on this limit order here of 2% risk, because if I'm asleep and this is going to happen quick, I want to be exposed. And if we reverse instantly out of here, I'm exposed. So my mental game is good, because I'm saying, okay, I'm exposed, and 2% exposure for a higher time frame 3-hour trade is okay. It's nice. And if I can, I add as much as I can, and I increase my gains, and then I'm trying to like tighten this or cut it early or play around. But usually I like to have this wide one as limit order, because even though it's on 2%, it's very unlikely that we're going to hit this level and just go down another 25% like nothing. And even if I'm just paying 2%, so it's a very calculated risk. And within here, if I see the reversal, I can put my stop below the low. I might have scaled in to this point, and then the trade looks something like this. And then of course, if I tighten my stop loss, my risk is only yeah, from 20% to 10% is only 1%. So I can add another percent, and this time very tight, and maybe even on lower time frames, very, very tight, something like that. And I can triple my position size, and was able to catch this whole move, be exposed, don't get stopped out on a big flush, on a quick flush into the level. So you see there's so many things to do with position management. It's like it's getting so fluid, and you can play around so crazy and increase your gains or minimize your losses and cut early and all that. And I'm working a lot on that because you need to understand lower time frame, and lower time frame, especially on a coin like Doge, can be so messy and so manipulative and so tricky that I really want to learn to, or I need to learn to read the signs so properly. On ETH and on Bitcoin, for example, it's a lot easier to read, because the higher the volume, the less the fuckery is, even though it's still crypto and the fuckery is still high. But usually that's why I like to trade Bitcoin's key levels as well, even though you don't expect a 20-hour trade, but it's usually very clean price action. And also on BTC, you don't have these high expectations, and you just TP at the right moment because you're aware of the range and not projecting any hopes and dreams onto the trade. And so I like trading Bitcoin's key levels because usually, as I said, it's a lot cleaner. But I want to figure this for altcoins as well, because obviously the performance, if you know how, is a lot better. When there's no confluence, do you rely on candle close confirmation? Considering that you're also sharing your trades, I guess that puts a lot of extra mental pressure too. Yeah, indeed. That's, I mean, I like it. Since I'm trading, I'm sharing it publicly, even though nobody was reading it in the beginning, luckily. But I always like doing that because it pushes me to be better. And usually if I do something for somebody else, I do it a bit better than for me. Because if I journal just for myself, it's usually like, oh, yeah, I know what I mean. I don't need to finish the sentence, blah, blah. So save time. If I do it for somebody else, those people or you guys, you need to understand what I'm thinking. And if the sentence is not finished, then you won't understand it. So I really need to think it through, complete my thoughts. And so this is more helpful to me. That's why I love doing it, and that's why I do it since the beginning. But what it does to me is that I want to be more right more often, because if I share something publicly, of course I want to be right. So, but the real goal of trading is to make money, not to be right. And this sharing it publicly, and especially now with the group and everything, I want to deliver something. I want to offer something to you guys. And so the pressure of being right and doing the right thing is a lot higher than if I just take a trade for myself, because then I know it's just about me making money. And if I share with you before, like also the idea of we sweep those highs before we go down, which is obviously not happening right now. This is, yeah, this is a little more painful than if I just had the idea for myself. But it also makes sure that I'm completely honest with myself, because if I just tell myself the story and then it doesn't play, I can always twist the story and say, no, I was a little bit right anyway. But if I share it publicly, of course, this with recipe, I can tell nobody that I was thinking something else or expecting something else. So it makes sure I'm more honest with myself and be more precise, and it pushes me to be better. My little skull seems to play anyway. Yeah, so yes, it puts on a little more extra pressure, but I'm the type of guy I blossom under pressure a bit more than if I just do it for myself. All right, guys, I think that's it. So if somebody has a very important question left, please ask. But other than that, I would wrap it up today. Seems like you're all happy. Okay, guys, was a pleasure. I hope you have a great weekend. and we talk next week. Bye, guys.